Imagine a world where a tiny island in the Pacific holds the keys to the global economy. Taiwan, a small island nation, plays a massive role in the global market. Its stability is crucial for the functioning of numerous industries worldwide. But what would happen if China decided to attack Taiwan? The ripple effects would be felt far and wide. An attack on Taiwan could disrupt the intricate web of global trade. This would not only affect big corporations but also trickle down to affect everyday consumers. Markets could plunge, prices of goods could skyrocket, and economic uncertainty could become the new norm. Taiwan is more than just another player in the global economy. It is a linchpin. The possible economic fallout from any conflict involving Taiwan could be unprecedented. Taiwan is not just a hub for trade, it is the beating heart of the global technology industry. The nation is home to some of the world's leading semiconductor manufacturers. Semiconductors are the tiny chips that power everything from smartphones to cars. Companies like TSMC, Taiwan Semiconductor Manufacturing Company, are giants in this field. Without them, production lines around the world would grind to a halt. If China attacked Taiwan, the supply of these essential components could be severely disrupted. This would have a cascading effect on industries worldwide, from tech giants in Silicon Valley to automotive manufacturers in Germany. Prices for electronics could soar, and consumers would feel the pinch in their wallets. The disruption in semiconductor supply would affect global manufacturing, leading to delays and increased costs. Any conflict that threatens this balance could have far-reaching consequences. The financial markets are notoriously sensitive to geopolitical events. An attack on Taiwan would send shockwaves through global stock markets. Investors would react to the uncertainty and potential disruptions in trade. The initial reaction would likely be a sharp decline in stock prices worldwide. Commodity prices could also be affected. Oil prices might spike due to concerns over disrupted shipping routes in the Pacific. Gold, often seen as a safe haven asset, could see a surge in demand, driving its prices higher. Currencies would also feel the impact. The US dollar might strengthen as investors seek safety. The immediate market reactions would be just the beginning of a longer period of adjustment and uncertainty. The immediate market reactions would be just the tip of the iceberg. The long-term economic shifts could reshape the global economy. One of the most significant changes could be in the restructuring of supply chains. Businesses might seek to diversify their sources to reduce dependence on Taiwan. This shift could accelerate trends already in motion, such as the move towards regional supply chains. Countries might prioritize local production to mitigate risks associated with global trade. Geopolitical alliances could also be affected. Countries might realign their economic relationships based on new realities. This could lead to a more fragmented global economy, with regional blocs becoming more prominent. The long-term economic shifts would redefine the playing field for businesses and governments alike. The implications of a conflict over Taiwan would not be confined to boardrooms and stock markets. Everyday consumers would feel the impact in their wallets. Prices for electronics, cars, and other goods reliant on Taiwanese components could rise. The increased costs of production would likely be passed on to consumers. Inflation could become a concern. As prices for goods increase, the purchasing power of consumers could decrease. This would affect households' ability to buy not just luxury items, but everyday necessities. The job market could also be affected. Industries facing supply chain disruptions might slow down hiring or even lay off workers. The ripple effects of a conflict over Taiwan would touch many aspects of everyday life. The potential conflict over Taiwan is not just an economic issue, it has broader geopolitical implications. The balance of power in the Asia-Pacific region could shift. Countries might be forced to choose sides, leading to new alliances and rivalries. The United States and its allies could be drawn into the conflict. This would have significant implications for international relations and global stability. The geopolitical landscape could become more volatile, with increased risks of broader conflicts. From an economic perspective, the disruption of global trade and supply chains could lead to a rethinking of globalization. Countries might focus more on self-sufficiency and regional cooperation. This could lead to a more fragmented but possibly more resilient global economy. For more insights on such critical issues, consider subscribing to Express Econ Geo Finance Insights for in-depth analysis and updates.